Intuit may be down more than 13% over the past month, now trading at $662.66. But the story behind the stock is brighter than the chart suggests. The company just posted strong fiscal year earnings, signaling that the fundamentals remain solid despite recent market pressure. Let's break down the latest earnings report before diving into the stock's valuation. For fiscal year 2025, Intuit reported total revenue of $18.83 billion, up 16% year over year. Expenses increased in line with business growth, but the company still expanded profitability. GAAP operating income rose 36% to $4.92 billion, and the operating margin saw nice improvement, jumping to 26.1%, indicating a 17% growth compared to the previous year. The last time we saw double-digit growth in operating margin was back in 2016, largely due to a transition year in 2015 that involved divesting certain businesses including Demandforce, QuickBase, and Quicken. Now, looking at net income, it grew sharply, reflected in GAAP earnings per share of $13.67, a 31% increase, highlighting both strong top-line growth and improved operating efficiency. Now, there's no question that Intuit delivered a standout fiscal year, posting strong growth across both the top and bottom line. Yet, despite the solid results, the stock slipped nearly 5% following earnings. The concern lies not in the company's ability to grow. Its fiscal 2026 outlook still calls for double-digit gains, but in how those growth rates stack up against expectations from a year ago. As the table below shows, while revenue growth remains healthy, the projected increases in GAAP operating income and GAAP earnings per share are meaningfully lower than the prior year's guidance, signaling a moderation in profitability growth. The recent pullback has also brought the valuation down to a price-to-earnings ratio of 48.48, a level that, as the chart shows, has historically marked a bottom before the stock begins to trend upward again. While Intuit's valuation may appear reasonable relative to its own historical averages, a broader comparison tells a different story. Against the Nasdaq index PE ratio of 30.18, Intuit's current PE of 48.48 represents roughly a 61% premium. With all that in mind, the key question is whether the stock is a buy, sell, or hold. Analysts are overwhelmingly leaning towards a heavy buy, assigning an average price target of $822.27. From current levels, this suggests a potential upside of nearly 24%, highlighting a compelling opportunity for investors. So if you enjoyed this video, please drop a thumbs up and subscribe to the channel. Let me know your thoughts on Intuit in the comments below. As always, thanks for watching, and I'll see you in the next one.